Focus today on trading hour today is certainly the markets. We're now joined by Rohit Srivastava to understand the setup on the equities. He is the founder and strategist of Indiacharts.com. Rohit, morning, and thank you very much for joining in. Just till yesterday, things appeared to be, heading downwards slowly but steadily. We were defending that 200-day moving average, but you just got the sense that the markets were found it very difficult to climb higher. But today we've got this big gap up opening, courtesy the monstrous rally on Wall Street. What's the setup looking like? Are you convinced about this gain that we've seen?
From a very short-term trading perspective, I would be a little...
Okay, Rohit, your frame has frozen, so I would request you to repeat the answer.
Sorry.
Yeah.
So the last in a bullish stance on the market, and the reason really to do that has been that we have seen our daily momentum indicators cross over to the buy side. That has been one. Second, since we made the low on the 30th of September, the decline in the market has actually been very, very slow and muted. So we haven't really seen a very, very sharp decline. In fact, some sectors like the metal sector has actually held up pretty well. You've also not seen some of the heavyweights, for example, Reliance Industries make a new low. So all these observations put together gave us a sense that the fall that we had seen had sort of averted for the time being. And we could actually see a retracement of this entire decline. So what that really means is that you have support at, say, 16,950. A 61% retracement of the entire fall that we saw through September till the 30th of September comes to around 17,600 around. So we do expect it will bounce back to at least 17,600. But we do have reasons to believe why it can actually, overshoot that number. And the reason really is the positioning. So before I come to that, I'll also talk about Bank Nifty. The level would be around 40,136. That's around 61% retracement. And if we actually go above that, we would look at around 40,890. That's around 78% retracement, because banking has actually held out better, meaning that it has fallen less than the Nifty, taking a support at a much higher retracement. And therefore, on the upside also, it could retrace a little more. Now, what would really cause that, and what is the risk in terms of being too bearish right now and the markets overshooting even the expectations that I've just given? The reason is that you have a short positioning, not just in Indian but also US markets. So in the US markets, you study the CFTC Commitment of Traders report, which comes out every Friday. And as of last week, it is still showing a net short on S&P futures of 209,000 contracts. So that's the position out there, and it stayed that way all through since I think almost since June, where there was a short positioning. Markets did rally, and through this fall, there's been really no covering of that entire position. Now in India, what we have seen is we did see a covering of shorts through June and July, but once again they've been built up. The FIA positioning, which was almost 145,000 contracts short in June now, and they had gone back to long. Now they are again short 120,000 contracts. The really big number is an all-time high long position in client data, which is the opposite side. And yesterday night, it is reported for the end of day data, 159,000 contracts long. Now, we consider that the client data includes everyone, not just retail clients. Such a big position gets taken by HNIs, corporates, and large investors. And so there's this strong positioning, which shows that on the one side you have futures which are short, because you can also see the Nifty discount. So you have a short position by FIs here, you have a short position in the US, and that is sort of going to limit the downside, and so a lot of smart money is probably going long, I think, is what the opposite side shows. Always there's one side, two sides to each trade. And that's why I think there's a chance that while a minimum 17,600 can happen, I will not rule out that we actually overshoot towards 18,000 if the momentum really gathers pace and if these shorts don't really get cut quickly.
Okay, 17,600 could happen, but you think a move to 18,000 is also very much possible if this momentum sustains. Rohit, good morning and thanks for joining us. This is Pavitra. You were mentioning the metals pack, so I just want to press you a little bit more on that. Take us through what, the charts are really looking like there, because we have seen a little bit of a fall come through. And do you, you're sounding quite optimistic, so do you think the worst of it is already in and it's not going to slip too much from here?
So on a long-term basis, I cannot say whether the worst is in, but near-term, it definitely looks like that. If you just look at copper prices, for example, they haven't broken the low that they made in June, despite this recent rally in the dollar. So that sort of gives you an intermarket divergence. We are also seeing a pullback in aluminium. The reason may be, of course, Russia, but the bounce started a bit earlier than that. We are seeing higher prices in oil post the cuts that OPEC made. So sort of all commodity prices are holding up over here. And so in that sense, when you look at metal prices, in the most recent run up since October, when they even pulled back in the last few days, they didn't go below the 61% retracement in terms of the metal index. So most of the underlying stocks, they've gone up a lot more. Forget the decline; they've gone up a lot more compared to what they fell in, say, August. Whether you look at Hindalco, you look at Tata Steel, and specifically, I think the copper aluminium space that comes first in notice. But surely the entire sector eventually, when one part moves, then even the steel stocks start moving. So all of them have actually bounced much harder and then are falling much more less in the last few days, selling that we've seen in equities. And so there's a sign of strength in the metal sector. And so I would think that it's not over because metal prices have only started to rally just now, whether it's lead, whether it's aluminium. And since I mentioned oil, what you would also look at along with metals is oil and gas. So both metals and oil and gas, which are commodity-based trades, would actually have some upside over here, is what I'm sensing over the next maybe 1 to 2 weeks.
Okay. Hi, Rohit. Morning. Technically, what appear to be the weakest sectors right now?
Slightly tough call because the weakest sectors were IT and metals, and we're actually seeing strength there today. The IT index itself has broken out of what we would call a downward channel over the last 1 month, and that's actually a bullish breakout that can further spur upside. So where should we really look for weakness? The one place, when strength comes into the market, what happens is a lot of money which had gone into defensive, which is it had gone into FMCG. It's possible that the strength in FMCG actually wanes while money tries to move back into places like banking, IT, metals, and so on. So if I would think of weakness, I would think of FMCG.
Can you talk a bit about IT? Because you spoke about how a rebound is playing there and it can extend itself. What would be the key levels on Nifty IT, and which are the tech stocks which look the strongest on the charts now?
So I think the results are really driving the strength. So, if you look at the results of Mindtree, Infosys, and so on, I would think that those are places where there's strength. I would add that while we are giving a bullish view there, we have positioning. So we don't really give advice on the particular stocks, but Infosys, Mindtree, HCL Tech, I think even TCS has a good chart setup. In terms of levels for the IT index, I think, like I said, today we do have a breakout. The breakout is at around 27,900. And above that, what we are really looking at it going to around 30,500. That's the next resistance we'll see. So that gives us quite some room for a trade.
Okay. Rohit, what do you think about the real estate names? Because, we have been getting significant cuts on all of these stocks as well, right? So do you think there's any sort of change in the real estate pack, or do you think it still looks reasonably strong?
So if I had to take a 4-5 year view on real estate, I may be interested. But in the short term, I think the biggest risk in interest rate sensitive sectors is that bond yields have still not gone down. So that in terms of the macro issues have not gone away. So when we look at interest rates, we still see higher bond yields coming in. Therefore, sectors that would be directly impacted by rising rates is something we would not want to get into. So that is why we'll probably avoid that sector for the time being. But that said, markets bounce, everything tends to move a little bit. And so it is possible that you get a slight bump up in real estate stocks. But like I said, we'll probably let that pass.
One final question. Fundamentally, the consensus bullishness is on the banking side. And the loan updates that have come through so far also look very optimistic. There is a 4 to 8% quarter-on-quarter increase in the kind of loan growth companies have reported, the banks have reported. Fundamentally, how are the banking stocks looking and the Nifty Bank?
So like I said, the Nifty Bank Index has been stronger than the Nifty itself, not falling that much as Nifty did in the last few days. So clearly that means even on the upside, it will do more, which is why we've given slightly higher levels. But again, what we are looking at here is a trade. That's what I want to highlight. We are not looking at a multi-month rally or something like that in banking, but definitely there may be a trade over the next week or two.
Rohit, just one final question because, if we have you on, I want to ask you about some of these defense names and especially stocks like Mazagon Dock or Cochin Shipyard. Huge up move we've already seen, but do you think that this trend could really continue?
So I think in my previous interactions, I have spoken about defense. Even in a down market, that was the one place. Defense and pharma were the two places where we were looking at hiding somewhat part of our capital, and I think that will not change. So we'll continue to like defense on a medium to longer term basis. Stocks are not very expensive. The momentum is good. The trend setups have not really broken. So I think we continue to like most of the defense names.
You continue to like pharma as well?
Yes, I think selectively. Pharma will have to be a little selective, but yes, because in a tough market, pharma does get a bid, and pharma has also been a sector that's been down for more than a year. I think it's longer than the market. It has been under pressure post the first rally that it saw in COVID, and so in that sense, these sectors I think at a very good place in terms of less downside risk. And so it's a good defensive place to be in whenever the market really falls.
Rohit, pleasure having you with us. Have a good weekend. We'll chat up very soon. Time to get into a break. Up next, we'll discuss commodities with Manisha Gupta.